We've all heard from billionaire investors that the first 100K is the hardest sum to put together in your savings account. But once you're there, how should you put your 100K to work? Or how can you use your money to make more money for you? In this video, we're going to walk you guys through some options to which you need to have yourself open before you put your first savings to work and start generating profits in the stock market. Many beginners fail to make profits in the stock market because they're continuously following the old and weary practices. So before you even consider the idea of buying some stocks in the stock market, make sure you say goodbye to all the old practices and start making money through the ideal ways of investing in the stock market. Welcome to 5-Star Finance. To begin with, it is normal for you to worry about your first investment in the stock market. But by the end of this video, you're going to feel a lot better. While investing goes a long way in helping people achieve their financial freedom, it also requires some parameters which need to be dealt with. You can't just go out all guns blazing and end up blaming some financial pundit you came across on the TV. But if you have 100K in your pocket that you want to invest, you're open to many options. Unfortunately, the old practices are not generating big returns for investors anymore. Now, the interesting thing is that fortunately, there are still some options that can help you make fantastic returns. This video will act as a guide you can always revert to while making decisions in the stock market. The number of profits you're going to generate by investing 100K will depend on how well you analyze stocks, what is your niche when you're looking for stocks, and what degree of grip you have on investing basics like accounting, understanding of parameters like intrinsic value of stock, the margin of safety, and other important rules. So before you invest your money, make sure you're well aware of some basic investing dynamics. But once you hold your ground by getting the basic knowledge, that is where the real deal begins. This is a list of stocks in which you can invest 100K. First up, when you step into the stock market with 100K, the S&P 500 should be your target. You need to understand that the S&P 500 acts as the benchmark for all major fund and portfolio managers. Now, why are we stressing the need for your money to go into the S&P 500? When we look at the trend from 1950 to 2021, the S&P 500 has generated an annualized average rate of more than 11%. You might be wondering that the S&P 500 is an expensive investment as a beginner, but this is mere speculation because it is way inexpensive as compared to other individual stocks. Now, the S&P 500 includes stocks from all the major sectors, like technology and consumer discretionary stocks, which means that if a sector gets hit, you can always cover the loss by the profits coming in from other stocks. As a beginner, the S&P 500 provides great security, which is pertinent for success in the stock market. And if you still have reservations regarding the S&P 500, you should know that the greatest investor of all time, Warren Buffett, one of his annual letters to shareholders included a portion from his will, and he wanted his children's inheritance to be placed in the S&P 500 because the long-term prospects attained from this particular decision are way secure and stable. Second up on the list are the dividend-paying stocks. What better than a stable income in your bank account, right? Everyone loves some free-flowing cash. So it's like whenever these companies make some profit, they give out a chunk of the cake to their investors so that everyone can benefit from it. Dividend stocks are a great way to cement your position as an investor. These type of stocks will provide value investors with two types of major benefits. Firstly, through appreciation in the price of stocks, and secondly, through the shares given out by companies. Apart from that, many dividend-paying companies are in the defensive or non-cyclical sectors, which also means that during severe economic downturns, such stocks can always fight back against volatility. Such companies usually have enough cash with them which benefits them in the long-term prospects. To recognize the companies with high dividend yields, you need to remember a thumb rule, which is simple enough for everyone to understand. Simply take the annual dividend per share and divide it by the price per share. For example, if a stock is available at $30 and the company's annual dividend per share is $1.50, the dividend yield will be 5%. In this way, you can look for companies with high dividend yields to create some passive income by making your money work for you. The third type of investment you could invest your money in is an ETF. An ETF simply means Exchange Traded Fund. Now basically, it is a collection of hundreds or thousands of stocks and bonds, and they're managed by experts that are trading them in major stock exchanges like the New York Stock Exchange. You might be wondering why you should put your hard-earned money at the disposal of an ETF manager? That experience is of vital importance in the stock market, and ETFs are low-risk investments. With a little sum in your pocket, you can target a bunch of different stocks. And do you know what the good thing is? They're inexpensive, making them perfect for beginners. So if you're looking for stable and low-cost investments, ETFs should be at the barrel of your gun. Another advantage for putting your money in ETFs is its tax-efficient nature. You don't need to pay taxes when you're dealing with ETFs. That brings us to the fourth way to invest successfully as a beginner, and that is to buy individual stocks. When you're buying a stock, you're actually buying a part of that business. You're purchasing the ownership, in simpler words. These stocks are beneficial. No doubt that the tax comes along, but the longer you hold on to such stocks, the less of the tax you have to pay. It is a great way to understand a company and start looking into the long-term prospects. When you no longer have to pay fund fees to managers, you can plan many things. Now, one may argue that individual stocks are not good for diversification, but that's not the case. According to Warren Buffett, diversification is protection against ignorance, because if you understand a business in the best possible way, why would you need to diversify? As the first rule of investing, according to Buffett, is don't lose money. And the second rule wants you to follow the first rule. It is apparent that your utmost concern should be to understand the stock, which makes stable individual stocks beneficial. For an investor who is just getting into the stock market, owning stable individual stocks can be a great way to learn more about a company or sector of interest. With growing competition in the stock market, with everyone trying to make some big profits, it has become increasingly important for value investors to nourish their knowledge regarding stock market investing. Because we believe that the old practices are not yielding ideal profits for people. So it is increasingly important to understand the 6 stock categories that are each different to understand in order to clinch the crucial advantage while investing in the stock market. If you want to learn more about these 6 stock categories, we made a free guide which you can grab a copy of in the description below. Take advantage of this free guide and increase your skills with the simple but powerful knowledge we provide in the free guide, The 6 Stock Categories. Check out this video we handpicked for you, and we'll see you in the next one.